All right, welcome to the Trading Alchemist, everyone. I hope you had a great weekend. It is February 18th, 2026. I don't know why I said weekend. It is Wednesday, everyone. That we had a pretty extended holiday, so, maybe I'm still recovering from it. Who knows? Anyway, let's jump into these charts. We really didn't go anywhere. We are still kind of stuck in this zone here. Now, let's take a look. First, we are at the resistance area of the previous range. Okay, this was the previous range that we came into. We created this wick. We were over here last we left off, and or I think, yeah, we were somewhere over in this section. I believe it's been about a week since I made a video. So here's where we are. So this is the resistance. We are creating a range at this point. Okay, so this is what the range looks like. It's not a very good range, but we've been at this place before. We are actually creating a pattern that's very similar to December's pattern. And December's pattern, I believe, was, let's jump over here. Yeah, this was December's pattern right over here. We came down, we bounced up, and we started just kind of like chiseling around over here. Now, this is kind of like where we are. We tap down, we chisel down, and here we are right there. So if I take a look at the closer time frame of this, so let's dip down a bit. Let's go to the 1 hour. You can see we're starting to create these BART patterns again that we had going on. So here's a nice little BART pattern right there. And actually, let me use another color since there's, right? So here is another pattern, a BART pattern that we're forming. And here's another BART pattern. And this is the same thing that happened in December. The liquidity was low, so these charts started getting played around with. So yeah, we're kind of in the same zone. What I wanted to talk about, well, okay, let's jump down to the bottom here. What I wanted to talk about was what actually happens in a bear market compared to a bull market, right? So let's draw some lines here. Okay, so this represents support, and this represents resistance. Yeah, I could spell. You got it, right? So in a bull market, what happens is when the chart gets down to support, it usually holds. And it bounces off of there. And then when it comes to resistance, it usually breaks. That's a bull market. But in a bear market, these same things work in reverse. When it comes to an area of resistance, it usually holds. And when it comes down to an area of support, it usually breaks. Okay, and we can see that this is a bear market. And all it really does is it just tells you how to work these charts. So let's take a look. Let's take a look at exactly that. So let's zoom into this section right over here so we can see. So we have this break of structure. This is an area that it needed to break in order for it to go up into the upper half of this range that we created, right? And you could see here that we were bouncing on resistance over and over again. We tried to break this. It was a fake out. It didn't even touch down below. And it came down to this area. Now notice that this only touched the bottom twice. But once it came down to the bottom, it actually broke. That is the characteristics of a bear market. So now here we are down here, and we've got this other area that we're starting. So this is, let's zoom up a bit more. This is what it needs to break. This is the current resistance in order for it to move up. And this is the current support line that it's making. So you could see here that it tried to come up twice and it failed. Now, if it does break up, for example, if it bounces here and then it comes over here, here is the next area of resistance right here that it needs to break. And if it does break this going up, we are going into the previous range, right? So you see this is the long section right here. So if it doesn't break this, then we're going down lower. And we talked about this in the previous video as well, exactly kind of where we're looking. So what I'm going to do now is I'm going to add a target on the chart. Now, I added this dotted line down at the bottom. Here's the dotted line right over here. What I did was I took a look at these clusters, and then you notice that this touched the bottom and this wicked right over here, but then we've got this really big wick right here. Okay, so what I'm going to do is I'm actually going to make a target in this section. This is going to be the target that I make right about here. And let me just label that. This is target. See something over here. Yeah, great. So this is the area that I believe if it did come down all the way to the bottom, is probably a really good area for a long, or to add on to your bag if you wanted to, right? It's around here. This is around the 50K mark. And if we came down over here and we wicked just a little bit, starting from here down into the middle at least, I believe we're going to get some kind of nice little reaction there. Now, I don't know if we're going to go there right now because, again, this is feeling exactly like this right over here. But I did want to show you something else. Now, one thing in the bear market that that I found was very useful, and again, I don't really use indicators. And before I get into this, the reason why I don't use indicators is because I'm the kind of person that doesn't like to go to a restaurant, like a 24-hour diner, that has everything on the menu, because it becomes hard for me to choose. It makes it hard for me to make a decision as to what I'm going to eat. At the end of my visit at the restaurant, I will not be hungry because I will get something, but I might not actually enjoy my meal. So instead, what I do is I end up going to a restaurant that is that has a theme, like an Italian restaurant. And then I know that I'm just going to eat Italian, and then I choose a meal from there that works. So I really like to put limits on myself. But going to a 24-hour restaurant doesn't, like, it's just as good. Okay, but I like to, in these charts, keep it very, very simple for myself so that I know where to buy and where to sell, because it's about 25% of your trading skill is TA. The 75% is psychology. You know, it's risk management, it's emotional management, it's everything under the sun. And we can get into that a lot later. But I have a tendency of making my charts and working with my elements that work for me so that I don't get confused and I don't kind of like start switching up my strategy. But there is this really good indicator called the 50 and 200-day moving average. Now, let me explain this indicator. The 50-day and 200-day moving average actually goes back 50 days. It goes back 50 days and gives an average. So this green one is the 50 and the red one is the 200. Let me double check. If you come over here and you double click on this, you can actually see the properties. So the green is the 50 and the red is the 200. And if you don't know where to find that, you can come up here to indicators and you can type in, I believe, MA50. There we go. And this is it right here, MA50 and 200. And I have one that has with cross in there. Now, what these crosses are, so let's just dive in here and just kind of like explain it for those people that don't know. When there's a cross between the 50-day and the 200-day that turns green, it usually is a bullish signal, okay? And if there is a cross for the red, it's usually a bearish signal. They call this the golden cross and they call this the death cross right there. It's appropriate. So here you can see that it is we passed the death cross, and I believe that was somewhere in like December sometime. Actually, let me just pull this up. Let's just go right over here. Yep, it was about November 15th, 16th, something like that. So now this indicator is pretty good. Now let me clear all of my chart here so you can take a look at this. So first of all, what you need to look at in here is exactly how the chart interacts with this. When it crosses, you can see that it stays above the green. When it crosses on the red, it usually goes underneath the red. So that's what you're looking for. So notice that this is the red, the death cross, and it goes underneath it, and it's stuck underneath it. But what happens is when it goes underneath the red, the green actually becomes resistance. So you'll see that as you go along. And let's just take a look a little bit further down so you can see. So here, when it crossed over here, you can see the green became resistance. And when it crosses above, it actually becomes some kind of support. The green becomes a support. So that's how you look at this. And if you look right here, you can see we moved very, very far away from this 50. Now, let me explain a little bit more about this 50-day, 200-day moving average. If I change it to a 12-hour, the lines change. What it does is it's not a 50-day and 200-day moving average. It is a 50 candle or 200 candle moving average. So this will count back 50 candles, and it'll give you the average from here and also here. And if you go through each time frame, you'll see that the death cross starts to change based on the time frame. And it becomes really good to kind of like jump through these and actually see. But as you go down in these time frames, you can see how it interacts with these lines. And it's important to understand that when it gets over here underneath the red, it becomes resistance. And you can see it on the lower time frames. Okay, it did try to bounce up here, but notice what happened. It struggled, and especially it never touched the red. Now notice what happens over here when it broke through. It came above the red, and now we are back underneath the red. So these are really good. This indicator in particular is really good on the longer time frame. Because it has a lot of information here. Okay, so let's go back to the bear market area. So notice what happens here in the bear market. When we crossed over and had that death cross, look how far it went away from the red. And then it crossed over, and this was the start of the bull market. So now that we're at a bear market, what we're looking for is we're looking for this to cross over to give us the signal that goes like this. Okay, but there's one other thing that I'm going to add to here. So just give me 1 minute here. I'm going to add one more. You can actually customize these. So I'm going to turn this off for now. And what I'm going to do is I'm going to turn this one on right here. This is a 10 moving, 10 average, moving average, 10 ribbons. So in here, you can actually customize which ones that you want. And I've got the 50-day and the 200-day right over here. So if you see, I've got the red and the green, and this is exactly the same as the other indicators. So if I put it on top, you can see that it just comes in here without a cross. What I'm going to add to this, though, is I'm going to add one more in here. I'm going to add 189 days, I believe. And I'm going to turn that on right over here. Oh, not 189 days. I don't know what I'm thinking there. Hold on a second. It is 389 days. There we go. 389 days. That's basically around 13 months. And I've got a third line in here. Well, okay, well, first of all, why am I adding a third line in here? This is getting a little bit crazy. Well, because everything works in threes. Everything works better in threes. So if we take a look now, this is about 13 months. And we've got this extra line in here. And let's just kind of explore exactly what's happening on this line. First of all, we've got this cross here from the green to going underneath the red line. And then we've got this white line now. And if you notice, the red line is actually it's about to cross this white line. So let's take a look at another area where it's done that. So we're going to go a little bit further down. And here it is right over here. This crossed. This crossed. This is the same exact characteristics as to where we are now. This was the bear market. Let's take a look at how these ribbons interacted in the bear market. So we need to go to an area that has a lot more history. A lot more history. This is the Bybit chart. I didn't realize I was in the Bybit chart. It doesn't change the indicator at all. It just gives us a little bit more information. So let me jump down to here. So check this out. This is the 5-day chart with the extra 13-month line on it. And look very carefully how things are working. When it hit this white line, look how it bounced. Look at that reaction. When it hit this white line, it basically was over. Like we've got this range that I was marking out right over here. So where does the white line appear on the chart? It is around the 50. Let's just be really specific here, actually. Let me pull this out right over here. Yeah, it's about 55, around the 55,000 mark, right? So let me turn this off again so that we don't get lost. So now you can see how exactly it interacts with each other, especially when the red and the green start crossing or connecting or anything like that. So take a look at this. Really add this to your arsenal. Take a look at exactly how it works on the lower time frames so that you can see what kind of plan you can come up with. From what I'm seeing, we have a little bit more of a dip to go down. Now, again, the reason why I am not using this is because if you look over at my chart here that I mapped out with the support and resistance, it all points to the same area. I'm going to scroll down over here and look at where my range low is. It is in this zone. So to me, this is the spot. This is really the spot. Now, that does not mean that we can't bounce up from here. But if we do bounce up, we've got two places that we are looking at that might be resistance. Let me turn this off because now I'm getting lost. Right? It's that easy for me to get lost. I turn on those indicators. I do my research. I map it out. I get a good idea. And then I come back to my charts of where they are. So this is resistance right here. And this is resistance. So right over here is probably a good area for a short. But if we do break higher, this is the next leg that we're looking at. So you make a plan for that. Okay, and the same thing over here. We've got this wick over here, and then we've got this area down here. So if we do come down to this area, there's probably going to be some kind of reaction, or there might be a reaction right over here. And in that case, you got to decide: is it worth getting into? Should I wait a little bit longer? But there is a difference between timing the market versus time in the market. Timing the market, let's just say we're wrong. Or let's just say we're right, but you were busy and you missed that zone. Well, some people think that when they miss an opportunity here, like it's gone, it's taken off. Okay, and they become afraid to kind of like buy in or anything like that. So if you are buying, time in the market is basically just kind of DCAing in as you go in, because eventually this will turn around. So that's up to you how you do it. But definitely, play it smart. So let me just quickly go over where we are again and kind of conclude this video. First of all, I added this ribbon here. This is the simple moving average. And I added one extra thing to the simple moving average. I added a 13-month, around a 13-month moving average. 389 is what I added in there. And I have the 50, the 200, and the 389, sorry. And in here, you can actually see the same thing. And remember, depending on what chart you're going to, it's no longer going to be days or months or anything like that. It's going to go off of the number of candles. So the ribbon will change. But you can take a look at how the ribbon actually plays out on each one. And you can see how in a bear market, how these ribbons really play a nice role in showing you where resistance is. If ranging, if becomes a little bit confusing, it just becomes one extra thing of confluence that you can use to see exactly what's what. So this is kind of where we are. All right, guys, if you have any questions, feel free to drop a comment down below. If you do like this content, please feel free to like and subscribe. I would really appreciate it to let me know that you're there, and I will continue making this content. Hope you have a good day. Talk to you soon. Bye.